Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah.
Hi and welcome back to The Conscious Day Trader. I am Yanis and today we're going to break another ICT 2022 mentorship trade as we do every day. We've been doing it since day one of the 2023 January, where we had our huge 10k month, 10,800, and this month we've had a few less days to trade, so we're still doing really well. But what we're going to do today, if you're new to the channel, obviously we're going to break down the fair value gap trade. We're going to break down how I determine bias, entries, how we manage the trade in my own personal way. And you're going to get all that in the next 30 odd minutes of this video. Do me a favor and go and like the video and subscribe to the channel if you're interested in ICT trading. I am based in Bali. Also, if you're in Bali, drop me a message. I would love to meet some of you. It's a beautiful island, and why not one day you can come and trade here. We can create a little bit of a community in the area around Canggu. That being said, I had a few questions that I want to answer today. One, I'm going to show you how I upload on my journal, which is TradeSync. It's very simple, and we're going to go. I haven't uploaded my yesterday's trade, so we're going to do that together. That's something new you're going to learn. And also, someone said, how do I know what news is important on the pound dollar? Because we mentioned about the world news in terms of like announcement from Putin, war, Biden. These are things that we can't really prepare for. These are swan events. They happen not very often, hopefully, and when they do, you just have to be prepared to manage that trade rather than being you almost have to react rather than prepare yourself into certain news such as CPI, G20 meetings and so on that we're going to see for today. Today's the 24th, so we're going to look at the news for today, but in terms of yesterday, there wasn't a lot of news going around, so it was quite an easy in terms of you didn't have to worry a lot about what was happening in the news front. But let's jump first. We're going to go with TradeSync. So on TradeSync, you can see I'm currently haven't uploaded Thursday's trade, which we're going to analyze today on the pound dollar. We were long. I really like this because it gives you sort of your overview of this month, the previous months. You can go in detail of what time is your most profitable, what hours, what's been your best price, what sort of volume setups. You can also put annotations in and put mistakes and certain things that will populate out here. I might start doing that actually, because yes, we're having green days, but some of these trades, like Wednesday's trade, where I had a double bias, I was short in the morning, long in the afternoon. I wasn't very happy with that day, so maybe I could have added why I wasn't very happy with that trade. Still green though, and we still haven't had a losing day since January. Let's see how long we can keep that going. So what we're going to do is, first of all, we're going to add the 5%ers. This is my funded account. We're gonna jump onto the MT5, and as you can see here, we're currently running on 163,531 profit. I haven't taken any money out yet. I will do very soon because I'll need some money. So let's go on to the history, and the way you import into TradeSync, you're just going to right click on your day. Whatever you want to import into TradeSync, you're going to have to do it for that day. So I'm going to import just the Thursday. So we want to go on to the 23rd. And obviously I haven't traded up to the 24th, so I can leave that in there. And I'm just going to press OK. So that's going to give me my profits of $438. Now, in order to put it in, we're going to need to go to orders. That will populate the orders, and then you're going to go on to report, HTML, export that wherever you would like. I just replace my previous one, and you'll see how quickly we can import those journals. Then we're going to go back onto the journal, go on to add trades, import trades. That knows your history, so if you set it up once, all you have to do is browse, click on the HTML, upload, import trades, and that's it. How quick is that? That's what you're paying for. So you are paying a bit of money. There you go, successful, has gone in. Then I can go quickly onto my calendar and boom, populated 4 trades. Quite low for me. That's great. Where this week we've done 1,800. We're running a little bit lower than obviously the best month, but we can't have peak performance every month, especially when you're missing what's that, about $1,500 from this area here and not trading Wednesday. So we've traded 2, 4, 6, 8, 9, 10, 11, 12, 13, 14, 15, 16 days are going to be my total trades. So we're going to see how well we do with that. And now we've done that, if you have any questions, obviously I've left a link into the description where you can get 40% of this. If you are interested in being a sucker like me for technology and making things easy, you can pay a little bit more and you get the efficiency of not worrying to put it in an Excel sheet and trade. And you can actually click on all of these. You can filter out the day. So I've clicked on the 23rd. That would give me the information of that day. My biggest profit, 50% win rate because I had 2 losing trades. What time I took the trades, what time I closed them, what average return potentials, and so on. I might do a detailed video on this if there's interest on using TradeSync. Okay, that's enough for TradeSync. I think it's Jade, the person who asked me, Jaden, maybe, Jade. Sorry if I've killed your name. He asked about the news. So I use Forex Factory. Other people use the Baby Pips as well. Sometimes Baby Pips and Forex Factory have different news alerts. If you are worried about something, check both. And if it's on one, just make sure you stay out of it. So quick review here. We've got filters on the top. I only look for medium and red news, and I've filtered out only the euro, pound, and the US dollar because that's the information that I'm looking for my trading. Obviously, we're looking at the 24th today. I'll take that out, and that will tell you where we're currently at. You can get a bit of detail in terms of what it's done graphically previously, but also if you click on this folder, it will tell you the historical data and what is likely to happen with a different, so if it's going to be an increase or decrease in percentage. It's released monthly, about 30 days, end of the month. It's personal consumption, expenditures, and it will tell you why trades care, how is that going to affect certain elements. If you like fundamentals, that is an area where you can go in. If you're like me and look at opportunities technically, then you don't have to go into this depth. All you need to know is that 9:30 p.m. there's going to be some volatility. So what do? We try and get out before the volatility. Because we're not gamblers. I can't predict what this core PCE price index is going to do. Is it going to be 0.4? Is that going to affect the dollar positively, negatively? What I do know, whatever the information is going to come out, the dollar is always going to look for, well, the pair of the pound dollar or the euro dollar is always going to look for liquidity before it actually moves into the direction of the news. A lot of the times, these news are priced in a lot earlier before we put our trades in. So just get that into account because you've got an algorithm that is seeking to collect as much money as possible before it goes in the direction that it wants to. There we go. We've done news. I hope this has helped. Jade or Jaden. I'm killing your name. I'm sorry. And then someone asked about TradeSync. That's done. So now we can jump on to the good stuff, which is our trade. So another thanks to Dave, again, one more time for telling me, bringing it up to, in terms of the positions and getting the wrong price on a few videos back, but we're back on track and I've put something so that can't happen again, and you're going to see that now. So we can see that we've had 4 buys entries. Someone on the Facebook group called the 5% has asked, how did you find the bottom of that? I didn't. My first entry was up here. 106, and I had to sit into a bit of heat and manage my way out. I don't manage my trade like ICT does, so I don't have tight stops. I use my own personal way of trading, which I've learned from multiple mentors, including the Scruffy Trader, which he calls it madness, a Scruffy madness, which is a pound averaging back into a trade. So yes, you're adding into a losing trade, but not positions. You're breaking your positions into smaller parts. I'm not doing that side of madness. I used to do that. Now what I do, I have 2 to 3 positions, which is sort of my Yanis way of managing trade. Is it for everyone? No, absolutely no. Don't try and do this. If you don't know what I'm doing and you don't understand it, you're going to lose money. So don't try and replicate this. Stick with what ICT recommends on the front of the on putting stops close by, because if you're wrong, let's take for example what price is doing now. Let's say this is the break above, it's come and fill this fair value gap. ICT would say put your stop here below this. If the price continues down, you're tapped out and you wait for another opportunity. For me, that price is way far away than this, because I don't want to get out of these moves if I'm convinced that there's going to be a long opportunity for me to make money today, which it did. And you can see I had 2 opportunities which paid me $560. Take away the $112, I made $438. Could I have made more? Yes. Am I happy with the 480? Absolutely, I'm ecstatic. It's adding to my green days, and it gives me an opportunity to live the life that I want here in Bali. So, someone said, why are you not trading more? You can make so much more money. At the moment, I've got a limit of 10 lots exposure. Not that I would ever use that, but if I get in trouble, I know how to get out with that 10 lot. For me to trade bigger, the broker, and if they're listening, I hope they can do that for me. When I get a bigger account, let's say my account goes to 500,000, I will need a 20 lot. So not 2, because I would have to change my lot size to 2. And in order to have more positions that I can manage out, that would give me a maximum. With the current maximum lot of 10 would give me 5 repositions, or 5 maximum exposure. And yes, I don't do that, but I want to know that I have at least 10. I want to be able to manage my trade out. In terms of risk reward, which a lot of people ask, you know that if you're following by now, you know that I'm risking about 4 days work. So on the month, if we go back on the trade sync for a second, on this month where we're making 6,000, if let's say I had an absolutely bad trade where everything went against me, I wasn't able to manage it, worst case scenario, I'll lose 2,500 maximum. And that doesn't happen often. So if that happens, okay, I'll take my profits out and I'll have a bit less for the February. If it happens twice, then I might start thinking, okay, maybe I need to decrease for this month my lot exposure, maybe go to half a lot, just so I can make, have a good month's wage, because this is what I do for a living and this is my sole income. And you manage it like that. I do have a fixed in terms of what's the hardest stop, 2.5K, and I don't want to get there. And if you remember from January, that was quite close in one of these trades, and then it went for me. But it doesn't happen very often, and the green days outpay a bad week. Especially when we're having these good months and started since we've traded ICT. Back on the trade. So we've talked about that. We've talked about the positions. Now what you're going to see, I'm going to open this because it's quite handy. If you don't know how to use an object tree, big shout out to Trevor for showing me this. You can bring a group certain graphics onto your chart, which you then can click a button and they come on, off. Brilliant. And then with the FX markets, if I want to take them out and I want to have a complete full clean chart, I can delete everything. There we go. So we have a clean chart. and we're on the pound dollar. What else do we analyze? As you know by now, we're going to start on the dollar index. So we were long, and we're just going to turn on our FX markets, and we're going to go to our Thursday trade. So what were we seeing? Let's take the replay, and we are 7 o'clock. This is the information we had on the dollar. Okay, so the dollar showed signs of strength. What does that mean for the pound? If the dollar is strong, that means shorting the pound. But why was I looking for opportunity to long pound dollar, which means that the dollar will show weakness? It all comes from this move here. So this move here had a breakdown. We broke these lows here, came down, created that gap. Remember, we traded this, came back up, created the equal lows here. That's where the liquidity was down here, came across, tapped the liquidity, came up into equilibrium, came back down, tapped the liquidity again, and now we've got a lot of sell side liquidity, which eventually is going to come and take out, which will be interesting for our Friday trading. And then it came up, we had a gap there, continued all the way up, failed to break this high buy side liquidity after a strong green move here. So what were the options? Two things. This push could be creating fair value gaps on the left side here to come and fill, to come and break the high. So I was anticipating that the dollar index is going to be coming into this gray area, which is a higher time frame 4-hour fair value gap. Let's show you that quickly. Onto our 4-hour. This is the gap that has been filled, and if we put a fib on to see how much of it has been filled, it's filled 50% pretty much on the dot, 61% of so below the 50 of that fair value gap. Now, my sort of analysis was saying that the dollar can potentially come and take out liquidity above this high. Why? Because it's quite close to it. We've got a 4-hour fair value gap, and we have been going long for a while. So I am anticipating a bit of a relax onto the dollar index, but when is the question? Because we do have opportunities for repricing here into this fair value gap. And the algorithm and institutional trading, they know that there's stops around here from this move. Okay, buy stops. Because if I've shorted this move and it's come all the way back up, I don't want to be taking a loss after those profits if I've taken partials. So my stops would be here. So there's quite a high chance we're trading above equilibrium that this comes up to take that liquidity out. So if it takes the liquidity, someone can say, okay, why don't you trade the dollar short since you're analyzing that the dollar is going to be going up? Because we're very close and we're trading around equilibrium. It would have been quite a potentially risky trade for my analysis. So I wanted to see the dollar index come up, break the buy side liquidity, and potentially all the way up to the 4-hour fair value gap. It didn't do that because that is a lot of pips. Let's see, actually, for it to come all the way, we're talking about 757 pips. So that's not going to be done in a day. But however, this buy side liquidity, and if you look at these candles, these big candles, that's a 200 pip from here to here, 200 pips. So that can easily go and take out the previous daily high and take out the buy side liquidity. If you're new to the channel, obviously you're not sure what those daily highs and lows are. Just quickly, this is a trade for Thursday, so we're looking at Wednesday's candles, and we're taking the previous daily high and taking it on the top price, previous daily low on the bottom price of Wednesday. The equilibrium is the 50% of those two candles. And in an ideal world, because we want to see the buying the pound dollar, we want to see the dollar index going higher first, like a Judas move, take out liquidity into this fair value gap, and then see weakness in the dollar. And when there's a weak dollar, what does that mean for the pound? It's going to be going up. So that's the opportunity we were looking for. That was the analysis. So we're going to do one more thing on the dollar index before we jump onto our trade on the pound dollar and see how we analyze that. I actually want to show you, so we've got a picture of what happened. So this is the open of the London session. It just did exactly what we said, took out liquidity from the previous daily high. Now this can be quite scary when you're trading this, because when you see the pound dollar getting weaker and weaker and weaker. So you want to see a very good setup, ICT setup, break of structure, fair value gaps, taking out liquidities for it to come higher. Because if you see this as a breakout to the upper side on the dollar index, which we don't for the pound dollar, you can see that as a break in the highs, come back, refilling this fair value gap here. What does it do after that? Reprices, comes back up. And continues up, takes out buy side liquidity. Now this is where I was quite comfortable, because we're in the sort of after I like to get my setups around London kill zone, and that's why I had to sit in a bit of heat until early into this. I was looking for this move here, so I had to sit into this heat going up into that buy side liquidity, but then eventually it gave me that move that I was looking for. Now look at, in terms of just analyzing the index, if you're looking for a weak index, and we've just had a break of the previous daily high and it tapped into that buy side liquidity that we talked about, it did 240 pips. Someone said, well, the pound dollar was biased short. Yes, it was, but it gave you an opportunity on the index. If you were on a bias short, you would have got that in this move here, right? But in this move here, which is roughly sort of, what's that, 30.3 pips? I read that wrong, so that would be 25 pips. It gave you a 25 pip opportunity to be long on the pound dollar, and if you missed that, it gave you another one here for another 23 pips. And yes, if you had a short bias, it gave you a lot bigger with 35 pips. So both ways you can make money, and that's what's key about this. Don't get so stuck up on who's right on the bias, because you both are. And like ICT says, price and time is very crucial. Look at time. London, long. In between London and New York, short. Beginning of New York, long, short, and then long. So you had so many opportunities to be right both ways. Yes, if you have the long in this area here, you might have been easier to manage the trade out if you were in a bad position. Okay, we've said all that. We've analyzed the index. Now we're going to jump onto the pound, and we're going to turn on our lovely dailies. So these are the daily lines, previous daily highs, Thursday at 7 o'clock. Let's go and take that out so we can see it. And we're going to open the FX. We're going to also open our trend lines, which we were looking, and the liquidity. Now we've got everything open. Okay, so let's go on the daily and see what the pound dollar has been doing. Why would I be going long? When we discussed the previous day when we were short, that this is creating that sort of double top buy side liquidity on this area here. It's highly likely that it's going to come to the sell side to take this out. If not, where is it targeting? Up here. Now it's in a bit of a consolidation with a down momentum. So if you were just looking at the pound dollar, potentially you could say I will be looking for shorts, and nothing wrong with that. You would have had great opportunities by doing that, as we saw on the dollar index. For me, what I saw is that we had, if we go on to the 1 hour, we had this move here. Huge move up, a lot of volume. That's why you don't need the volume underneath the charts, because you can see it in the candles. A lot of volume. We had this fair value gap here that hadn't filled. Well, he had just filled and created the low on Wednesday, and then it started pushing up. someone can see that as a scary sort of taking out liquidity here to continuation down. And you might be right, because we're going to see this did come down, I believe, to tap into the liquidity. So we're going to see that. I based my analysis from my dollar index, and what did I see here? I saw that we filled this fair value gap. Now we're pushing higher. What have we got on the left side of this 1 hour? We've got fair value gaps here that can come and retest to push higher back into equilibrium, and in an ideal world all the way up to that buy side liquidity we're talking about. Let's go into the 15-minute. Now, what we're seeing, I've got my entries here, and this is what I was thanking Dave, because now I'm going to start doing this so you can see where my best entry is, where my worst entry is. And what we're going to do is put this measurement tool to see how far apart they are. So 43 pips. 43 pips for me is a heat. This position got into heat for about $430, okay? And I had two repositions, 2 trades paid me, and then we're going to see that I had 106 loss, like we saw on the MT5, and a $6 close, which is this position here, which I repositioned and closed. So the price came down. Now, why did I enter there? Because if we zoom in, what is this? So we have a break above this area here. Okay, so where we had the buy side liquidity, intermediate, we're on the 15-minute, so buy side liquidity. We had a break, retraced back, pushed higher, all the way up, quite a heavy long bias on the Tokyo session, created this sort of high after the Tokyo kill zone, so the high of the Tokyo session, and pushed down, and now pushed up all above equilibrium. Okay, so we've kind of had delivery from the previous daily low all the way to taking out the previous daily high, and it failed to break this area here, which is our buy side liquidity. Now, what did we see? I believed from the dollar index that we analyzed that we're going to be taking that buy side liquidity. When that happens, I want to be buying the pound dollar. And it gave me that opportunity by filling this fair value gap here. You see that? I got in at that fair value gap there. So let's go down onto the time frames. And I normally trade on a 1 minute chart. Let's see how that looks. So we had that huge move, repriced into here, came back down. Someone might see there's a break of structure, came back down, broke this high here. This is where I was like, okay, I need to get into this trade. And I got my opportunity when it came and broke this fair value gap. Yes, I didn't have the best entry, and that's what I had to manage with. But let's talk about management. I get so many questions about management. I'm not going to tell you everything of how I manage my trade, just because one is something that works for me. And if I tell you and you understand it wrong, I don't want you to go and take trades based on that, because you don't have the understanding that I have around how to do my management. ICT, if you were here, you would take your stop underneath here. So how long would that be? 5 pips, 6 pips. If that's too much for you, you need to get a lower entry. That's the easiest way to do it. And yes, you'll be stopped out quite a few times, but in all those stop outs, when you get a better price, that's going to run in to pay you for profit and outpay all the stops of the 5 pips. So my repositions, so I got in there. So what I start thinking straight away is, what is the game plan here? So let's say I'm wrong and the price doesn't scream up, which it didn't. What is the next target? And you can see the best entry there. Why do you think I got in there? 2 big reasons, all right? My first reposition is down here, which is taking the previously daily low, taking sell side liquidity. It's filling this fair value gap on here. Remember, I have a strong conviction from the dollar index that the dollar is going to be becoming weak into the next few hours. So I want to get a better price. In an ideal world, it doesn't break this, and this goes up and pays me with one position. But that's very rare because I would have to hit 50 pips on one position. So I kind of want to get my second entry lower. Now, the third position is a bit of my management that I do. So price came down there. Now for you, that might be so scary because you're breaking below these sell side liquidity here, and you're like, oh dear, I've got this very, very wrong. I am down 29 pips. So at this moment of time, I'm down $290. What do? I add a position. Why? Because I see it has filled pretty much 80% of this fair value gap here. So now I've got my two positions, and then it keeps on going down. Okay, how bad is this? Let's see. This has come down 17 pips. So that's another 170 drawdown. And this has become the worst position of 440. So we're half a grand down. Am I nervous at this stage? I am zero nervous at this stage. I'm actually quite happy because what I've analyzed previously and I've prepared for has happened. Yes, did I get in a bit early? Yes, but we were at a discount area and we had a price action showing indications that it could potentially go to break the previous daily high. So I am not perfect. I can't get this worst entry down here. I would have to wait the whole London kill zone, and that's maybe I need to do that. Maybe sometimes I need to be patient and wait for it. But I do want to be in a position, and sometimes being in a trade sharpens your mind. It's okay not being in a trade is saying, okay, I'm going to wait for this to come down here. But when I was in and I was down $290, everything clicks in. I'm like, okay, let's action time. Let's see what's going to happen. Take out liquidity here. Get in here. If this crashes down, how am I going to deal with these two entries? If it breaks these lows, I'm out. And that's probably going to be my 2,500. So this happens live when you're analyzing the trade. So we can see it tapped me in, and that was the fulfillment of the fair value gap. And I like this trade, so I killed it. I got in this trade, and I killed my bad entry, which was my reposition entry. If you can see it there. Let's see if we can bring it at the front. If you don't know this, you can actually bring graphics on the front so they're not hidden behind the others. I killed it for $6 loss. Okay, because I wanted to take that out now. And where is my break even at this moment of time? Let's take my Fibonacci. That's my worst entry. That's my best entry. Break even here. This came back down. Now I can manage it a lot better than dealing with just this position. What do I want to see? I want to see this come and fill these fair value gaps here on the lower time frames, and I want to reposition this trade for a better price. And that's what I did. I repositioned that second trade, so now I've got two trades here. It's roughly around here, I can't remember exactly. Filling these fair value gaps. I've got two entries here that are going to outpay the bad position. And soon as that hit, and it paid me for $438, so that would be roughly two positions, so 20 pips. Roughly here would pay me 400, minus this trade, roughly around here, 30 pips. That paid me, and I had to kill this for $106 loss. As you can see, the price came back down and put it all the way up there. If that had come up and I held it, I would have been paid very, very nice. I would have been paid 40 pips, double that, $800, killed that for 10, so $900. That's not bad. But did I want to sit and see if that's going to happen, or do I get paid here and go on and enjoy the day? I would rather the first option, because I can predict this happening, I can manage this, but me waiting for this is just pure gambling. I would be greeding myself into $800, where I know that this was a good analysis. We had break of structure here. What's the fear of this? That this move is filling up fair value gaps on this down move. So this could be coming back down. Why would I risk it when I've already been paid? And like someone said in Facebook groups, that this was a long day. So let's see it. I didn't watch the charts after I got paid. I went out, it came back down and retested the lows, created the low of the New York session. So if I hadn't killed that trade here, then I would have to go and deal with that trade, and you don't want that. So as you can see, trade management, I think, is one of the biggest key areas that you need to perfect. And yes, unfortunately, I'm kind of giving you, I've broken down exactly how I manage my trade today. And yes, you might not be able to put your worst entries where I put them, and you might not be able to put your best entries where I put them, but you get an understanding of how I use pound averaging of my 3 lots, break them down into 3 different positions, and then I manage to get a better trade. I hope this kind of clears the water a little bit. And if you're ICT a student, don't listen to this part. But what you can listen from here is how I get my entry, because that is as well, and how I analyze liquidity, draws to liquidity. How could I predict that the price is going to come and take out this sell side liquidity? How did I predict that the price is going to fill this fair value gap and then react to the high to go back to equilibrium? This is not magic. This is 2022 mentorship. ICT says this clearly in his mentorship. And if you can learn that, you can see these moves. And that's what I would recommend you do. Go and watch those 43, even if they're boring or even if they're hard to listen to. Watch that first and look at it in detail, understand it. And then when you come and see what I'm doing, you have the knowledge required to be able to speak the same language. If this is Chinese, we both need to speak Chinese. You have to learn Chinese, and this language then will be sharing the knowledge with the same language. And that's how it is, the ICT language. Okay, I think we've done a lot today. We've looked at TradeSync, we've looked at the calendar, Forex Factory. Yes, you have the link if you want TradeSync into the information of the YouTube. One thing we haven't touched base, and I hope you are following as well, is my Instagram account, which is, I always get it wrong here, the conscious.daytrader. Ignore the fakes. That is the actual account, and I share a bit of the life in Canggu in Bali. And make sure you also comment and like these videos, because it helps with the YouTube algorithm. And let me know if you have any other requests or you don't understand something. I try and respond to every comment. So that is Thursday's trade. We've got one more day trade, which I'm going to prepare for now, since it's 1 o'clock. I get the luxury of being in Asia, so I can see the pre-market. I can see a little bit of what the Asian market is doing for the pound dollar. And that gives me more information that I didn't have in Italy or London. So I can see the highs and lows of the Tokyo session, and it can feed information for my bias for the day. So this is going to be our last trading day, and obviously we've got 2 more days next week to close the month. We'll see how well we do this month. If we can keep that green color going through this month of February as well, that would have been my best ever trading. 2 months fully green without a loss. And I'll catch you tomorrow for another detailed trade, and see you soon. Take care.
I can't take no loss. I don't even know what it